Let's bring in Danielle Shay. She's VP of Options at Simpler Trading. Great to see you, Danielle. Let's start with P&G. Do you like the stock?
Yes, Kelly, I like the stock. I think the macroeconomic conditions right now are really powerful for this company, and I do think that they're going to continue trading higher. I have an overall price target of about 177 on the stock longer term. However, I will say that when you see a stock gap up like this post earnings, what I really want to see if I'm going to try to trade it for a post earnings continuation move is I really need to see it go out on the highs of the day. And so right now, it's a little bit lackluster, so I can't say it looks perfect for continuation going into next week. But in the longer term, I do like the company and the stock, and it's a buy for me.
All right, Danielle, let's talk about HCA Healthcare, hospital operator, facilities, that sort of thing. What do we think about HCA?
So when you look at this stock, I like it. I really like the earnings report. I especially like the move, but I'll say the same thing that I did about Procter & Gamble. When you see a gap up like that, and specifically the high on the day is within the first 15-minute bar, generally that means that it's not good for continuation into the following week because we're seeing a wick at the top of this daily candle, which means we have profit takers coming in here. So when I'm looking at it for a short-term trade, it's a little bit lackluster. However, I do like the longer-term chart, and I like the possibility of it trading up into the $300 price point.
I wonder if it means inflation's gotten better. I still remember that big miss from a couple of quarters ago. Danielle, finally, Albemarle, what a shocker this is.
Yes. So when you look at this one, I mean, we've really seen a shift in trend overall, and specifically today with the high volume break, we've broken some pretty key support zones. So with that, when we have a high volume break like this post earnings, and we've broken some critical support zones, I think it's good for continued downside. When you look at the lower levels of support that it could possibly trade into, it would be targeting first about 165 and then about down to about 150.
Wow. Okay. Got to ask you, Danielle, it's not technically part of three-star stock lunch, but we'll, talk about being shaken or stirred. The VIX below 17 today. What do you make of it?
Well, Kelly, when you're looking at the VIX below 17, I think it really opens up the possibility for the market to continue rallying here, especially when you look at the way that the market reacted to Netflix and Tesla earnings. Normally, when you see those big tech stocks fall on earnings in the way that they did, you'd see the NASDAQ fall. But I would say that the NASDAQ is incredibly resilient here. We're still seeing a lot of consolidation. And because the VIX is so low, I think that we have the potential for positive reactions to earnings, especially going into Google and Microsoft coming up. So I'm looking at the possibility that, earnings won't be as bad as feared, and we can still see the NASDAQ continuing to climb higher.
And Danielle, what do you say in response to those people who say that the VIX being as low as it is, volatility as low as it is, means that it's a good time to pick up some of those insurance policies for a downside move in the market?
Certainly that is possible. But when I look at the VIX chart, as of right now, I'm not seeing any sign that it's going to spike up. I will say that going into May, that is a time that I typically do like to short the market. And so it is certainly possible that we can get through earnings season and we get into the sell in May timeframe. During that time frame, I do like to come in and short the QQQs, specifically trade some downside after we have a run up into earnings and then trade that lower after the fact. But from what I'm seeing, that would just be a short-term trade at this time. It doesn't really look to me like the market is setting up for a major downside move.